Okay, perfect. So yeah, so pretty much what we're gonna go over today is the basics. So what is Forex, kind of what you should expect, what it all the breaking down of it, the currencies, just understanding what it is first. Once we go over that, and I have a slide, pretty much a slideshow that I'm going to go over. So I'm going to upload that online too. So if you need it, you're able to go on and check it out. And then we're going to go into a chart and I'm going to show you the different trends. I'm going to show you, or I'm going to show you what a candlestick is first, and then the different trends. And pretty much by the end of this, you should understand what Forex is, what is a candlestick, and then how to look at different trends and be able to look at the chart and say, oh, that is this. That's an uptrend. That's a downtrend. That's consolidation. We trade this and we don't trade this. So pretty much we'll be done by 2, just like I was saying. I don't like to be on here forever. Get in and get out. So of course, if you have questions, let me know. But are y'all ready?
We're ready.
All right. Where's y'all notebooks? Actually, before we start, where's the notebooks? All
I
right.
got an
All
old
right.
fashioned notebook.
All right, all right. I got mine right here too, so I gotta stay stay ready. So, I'm gonna share my screen first, and we're gonna get into this. All right. So, can you see my screen?
Yes.
Okay, it might be a little. Is it distorted, or you can see the whole thing?
Can't see the whole thing.
All right, yes, a little. Was acting a little weird for a second. So let's do this. How about now?
Yep.
Okay. So, short definition is pretty much what is Forex? Foreign exchange is buying and selling of the global market. That's the easiest way to put it. What we're doing is we're not literally exchanging US dollars for euro dollars, but what we're doing is we're looking at the market and being able to decide whether the market will go up or it'll go down. So just like how in the stock market and everything, for every buyer, there's a seller, and for every seller, there's a buyer. So remember, price always has to be equal. Just like I can't sell you something if you're not trying to buy it, if you're not a seller. And I can't buy something from you if you're not selling it. So y'all have been out the country plenty of times. So essentially what this is, what foreign exchange is when we go to Europe, we exchange our dollar. And let's say the dollar is worth 1 per usual, and the euro is worth 2. So the euro is stronger than the dollar. So that means if we're in Europe and we go to the US, we're basically more rich, where our money is worth more in value. So what we're doing is making money off the fluctuations of currencies. Just like I don't know if you guys watch the news a lot, so I don't know if you know that the yen is at the lowest that it's been in years. I don't know how long, but it's at a very low point. And what they say is, oh, everyone should buy yen, buy yen, keep yen dollars. Because when it goes back up, they're going to be worth a lot more than what they were. So essentially, that's what we're doing. But instead of us going to those countries and buying those and keeping them, we're able to either do this on our phone or pretty much on the computer. So we understand what we're doing is we're trading money. Foreign exchange is trading money. Just like how you go out the country and exchange your money, we're doing this, but just doing this either on our phone or on our computer. Do we understand that part so far? We're good?
We're good.
All right, perfect. So now let's go to the next one. So why is it important? It enables international trade and investments. The banks do this. This is how the banks make most of their money. They take our money and they trade it in the foreign exchange market and they invest it, and they are the big players in the market. Banks, JP Morgan, Wells Fargo, all of these major banks, these are the banks that are moving the market. When the market is moving large amounts of moves, we wonder, why did this happen? What's going on? There's news, and then there's the banks. There's the big players. So they're the ones that's putting all that money into the market, allowing it to move in such a liquid way. This is one of the most liquid markets because it's so liquid because all countries do it. Whenever you go to another country, you see a foreign exchange center. You see it. You probably don't recognize it, but you see it or you didn't realize what you were actually doing. Just like we go to Jamaica. In Jamaica, where our money is worth more. So if we go at a certain time when the dollar value is very high, we can get even more bang for our buck. Now, travel, as like I said, you exchange currencies. You're exchanging currencies when you travel, which I'm glad y'all have traveled because you've done this before. Um, and just like that, buying goods from other countries when you're abroad. Sometimes not all countries take a dollar, so you have to get a euro, and so on and so forth. So that's why foreign exchange is very important on the basic tip. Now, how does it work? Currencies are traded in pairs. So for instance, we have Euro USD. So that is the euro versus the United States dollar. There will always be two pairs when we're trading in the foreign exchange market. So the euro is the first pair and USD is the second pair. So let's say the euro is stronger than the dollar. By stronger, the euro is gaining value in the dollar. Think of it as the slash is a little versus. It's the euro versus the US dollar. So when the euro is stronger than the dollar, that means price will go up. Now, let's say the euro is weaker than the dollar. That means the price will go down. So then the currency that is in front is the one that is going to either decide whether it's going up or it's going down. So I'm pretty sure you guys watch the news a lot. So you're able to watch and see, okay, all the different news events and things that happen and why things happen. Because the news is a major player and a major part on why currencies move the way that they move. So price of one currency in other terms of another. So that's why it's always a comparison. Oh, what's up?
Okay. And I had this problem before.
Mm-hmm.
So euro versus USD, you're saying whichever one comes first, that's the one you're trading?
No, you're trading both of them. So for instance, you can trade Euro USD, Euro GBP, a lot of different currencies. Though when you're trading it, it's essentially this currency versus the other currency.
Right.
So if the euro is stronger than the dollar, that means it's going to go up. Price is going to go up. Now, let's say the euro is weaker than the dollar. So the euro, let's say some news comes out and the euro is falling. Like it's the value of the euro is very weak. That means the US dollar is going to be stronger just because the euro is weak. So
Okay.
now that currency pair is going to go down. That's essentially how that works. So the euro USD, if the first pair is stronger than the second pair, price goes up. If the second pair is stronger than the first, the price goes down.
Are they paired the same way all the time? Or does that change? Does it ever become USD versus Euro?
Yeah, no. Yeah, nope. Yeah, no. So we're gonna go over. So the next slide will be major currency pairs, and you're
Oh,
gonna see
okay.
that. Yeah, you're gonna see how it is. So Euro USD will always be Euro USD. It will never be
Got you.
USD Euro. It would
Got you.
just be Euro USD. So when we look at a
Oh,
chart, yeah, you'll type it. You're gonna see, and I'll say write down the major currency pairs. So when we go through and I give you homework on the chart, you'll be able to
currency
know what
pair.
you're typing in.
Let me just make sure I got that on. Currency. So this is the currency pairs is a agreed upon system that internationally is accepted. Is that kind of
Yes.
okay? Got you.
Correct. So
Thank
we
you.
got this so far. We understand pretty much how it works. So with the currency pair, if the first pair is stronger than the second pair, price will rise. If the second pair is stronger than the first pair, price will go down. And I'm going to show you in charts and stuff. Once we get past this initial part, I'm going to show you exactly how it looks in real time. And if we're good, just let me know. And then that way I'll go to the next one. And if I'm moving too fast, let me know. So please ask questions. I want to make sure you understand it. This is to make sure you got it. So when you're ready, let me know and we can go to the next one.
Ready? I'm good.
Perfect. Okay. So there's different, so just like how I was saying Euro USD, there's different terminologies for it. So USD is the US dollar, the Euro is EUR, JPY is the Japanese yen, and GBP is the Great British Pound. So that's why you'll sometimes, or pretty much as time goes, you're not going to say the euro versus the US dollar. You're just going to say euro USD or
Okay,
EU.
so you'll never
Mhm.
see USD slash euro.
No, you're going to see it. I'm just saying it as time, once you start to understand it more, you're not going to necessarily say the whole thing because you're going to understand as time, you're going to start to pick up the lingo, is the best way to say it. So if I say, oh, go look at EU, right now it's not going to click that well. But as the more time we learn and we talk about it, and I say, oh, look at EU, you're going to be, oh, that's Euro USD. So then you're going to go and type in EUR USD. Or if I say, oh, go look at GJ, that's GBP JPY. But that's going to come with time. So obviously, I'm going to say GBP JPY. I'm going to say the whole thing. But as time goes, and the more you look at it, the more comfortable you get, it's going to start to make more sense on why, or just to say it, to abbreviate things. The better you understand it, you just abbreviate it. So these
Okay,
are the
but
main. Mhm.
only thing I'm like right now, you have euro slash USD.
Yes.
Okay. My question is, would I ever see USD slash euro?
No, you wouldn't.
No. Okay, so it's always gonna be in this sequence.
Yes.
Got you.
Yes.
Okay. I have a question in reference to the British pound.
Yes, ma'am.
Has that always been, or is that a recent phenomenon with them coming out of the European Union?
Yeah, no, that's in foreign exchange terms, that's what it is.
It's
That's
always been the British pound as a
yes.
currency, standalone.
Yes.
That's interesting. Okay.
Yeah, so the pound, pretty much the pound. In the foreign exchange terms, that's what it will be. Unless there's when I say major, like something that has to be major to change that, because then that would change everything else. But as of to this day, GBP, Great British Pound, that is what it is since I don't know how long. So
Mm.
just like how, just to recap, Euro USD, you will never see USD Euro or JPY USD. So that will not be a thing. So EUR USD and USD JPY. For this instance now, for USD JPY, if the dollar is stronger than the yen, that means we will see the USD rise. So that pair, when we look at a chart, it will go up. If JPY is stronger than USD, then that pair will go down. And of course, I'll go over more when we're looking at a chart, it'll make more sense. So we good? Next slide, or are we
Yep.
still? And I'm gonna upload all this too. So by the way, I'm gonna upload everything also. Okay. So the Forex market hours are 24 hours, 5 days a week. So you can trade anytime. Do we trade anytime and every time? No, we don't. There's specific times that we trade, though this is 24 hours, 5 days a week. So the market opens Sunday at 5 p.m. Eastern, and closes 5 p.m. Eastern on Friday. So you have Sunday at 5 p.m. Eastern all the way to Friday, 5 p.m. Eastern.
Say that again.
So the market is open 24 hours, 5 days a week.
Five
The
days.
market,
Oh,
yes.
okay.
So it opens Sunday at 5 p.m.
Okay.
and then it closes at Friday at 5 p.m.
Got you.
Yes. And crypto is 24 hours, 7 days a week. So you can add that also. Crypto does not stop. So yeah, crypto does not stop. It continues to go. It doesn't stop. Though the foreign exchange market is 24 hours, 5 days a week. And there's different trading sessions. So there's London, New York, and Tokyo. The main thing we're going to focus on, though, is the New York session because that is in the morning. The New York session starts around 8:30 and it ends around 12
12 midnight.
p.m. p.m. So that afternoon. So 12 afternoon.
for New York.
Yes, the New York session.
So, say that again about the New York Stock Exchange.
So the New York session, we're trading, or pretty much that is around 8:30 a.m. to 12 p.m. So pretty much 8:30 a.m. to the afternoon. By the time
Oh,
it's afternoon time, we're pretty much not trade like we're usually 9 times out of 10 we're done by that.
and what time is London?
It's 2 a.m. typically 2 a.m. to 5 a.m. because during that time, in the sessions they merge into each other. So there's something called an overlap. So easiest way to think about it is 12 a.m. until around 8:30. Once 12 a.m. starts until morning is London session because in London, that's when they're awake. That's their time when they're awake. So then as for here, the daytime starts to come, 8:30 comes. That's when the New York Stock Exchange opens. So that 9:30 is obviously the opening bell, but 8:30 is when there's news that comes out, and you'll see there's always something that happens at 8:30. So then it starts to go into there. So there's an overlap between the London and the New York session. So when London session is ending, New York session is pretty much getting in there. So that way, that's where we're trading. I trade London and New York because I can stay up, I can be up at 3 o'clock in the morning. I know y'all aren't doing that. So New York session is going to be the session that we are going to focus on. And
Okay,
then
there's a
what's that?
third one.
Yes, so then there's the Tokyo session, which is kind of the that's more so the evening time. So when it's starting to get dark. So when the New York ends at 5, then around like that 6, 7, 8, that's the Tokyo session. So over there in Tokyo, that's when their stock exchange is moving. Now,
What time? AM,
that's
I'm
PM.
sorry,
Yeah, PM.
PM.
PM
So
session.
so New York Stock Exchange is how many hours is it actually in session? It
Typically
starts
around
at, huh?
8:30.
So it
So
starts at 8:30.
yes, and ends at 5.
Okay, thank you. But
Yes.
you were talking about 12 p.m., which
Yes.
is when you're looking at it. Is
Oh,
that
we're
what it
done.
is?
By then we're done.
Got you.
Yeah. So 9:30 is when the opening bell. That's what we always hear. Oh, the stock exchange is open. That's the opening bell. So that's what we're
Oh,
usually, what we're used to seeing. And I'm going to show you in the chart what it looks like at 9:30, but we don't touch it at 9:30. So some people do, some people don't, but we're not going to start trading until 10 o'clock.
right, right.
So that's when we're going to look at it. And more
Okay.
so, we're going to be,
Oh, I'm sorry. I'm still on Tokyo and I didn't get that time.
Oh, okay. So 7 o'clock?
PM.
Yes, PM
Okay, so 7 p.m.
to 12 a.m.
PM
Yeah, so
or AM.
7 p.m. to 12 o'clock at night.
Okay, so that's 12 a.m. Okay,
Yes.
gotcha. Okay.
Yeah, so Tokyo, we don't really touch. We're done trading by then because you're gonna see price doesn't, it just consolidates, which just means it's not really moving much, and we don't want to touch that. So in the morning time is when we're gonna get on the charts, get what we need, make our percentages, whatever we're gonna do, and once we're done for the day, and we go on about our business. So yeah. So here, just like an example, when it's daytime in New York, is nighttime in Tokyo. So that's why there's a Tokyo session. So over there, that's why they're trading. So we're not trading all of the sessions. We're gonna stick to the New York session and focus on that. So we're good so far?
We're good.
All right, perfect. Now, how to trade Forex. So basically, there's different platforms that they have. The big platforms or major platforms that they have are MetaTrader 4 and MetaTrader 5. Though those ones in the US, they're banned in the US. So there's a lot of, so brokers, they made their own platforms. So the platform that pretty much I use is Sway, but there's another one called Trade Locker. There's a lot of different platforms that we can use, but I'm going to go through that whole process and set that up anyways with you. No, we trade on a platform. So a website will pretty much log in and be able to understand, okay, this is what it is. This is how we load money into it. This is how this works and things like that. So when you're placing a trade, it will be more times than likely on a computer because we're going to be on Zoom. And that way we'll go through that whole process. Then we'll set up your demo account, how to understand, okay, how to place a trade, how to calculate all those different things. Um, so just like how here's an example, placing a trade to buy Euro USD when you think the euro will go up against the dollar. So we think, let's say we think the euro is going to be stronger than the dollar, we'll place a buy because we're expecting the value to go up. When you buy an investment, you expect the value to go up. Now, do we understand that part so far?
Okay, yeah. So when you buy, you expect a
Yes. Now, just say you hear bullish. That's another, if you're familiar with that term, bullish. The market is bullish. That means we want to buy. Bulls in investing is equal to buy. Bearish. Now, let's say in this case, we wanted to place a trade because we thought the euro was going to be weaker than the dollar. We would sell. So that means we would be bearish. So you might hear, if you've heard that on the news, or when you hear that, you're probably going to start hearing it on the news now. But when you hear the terms bullish and bearish, those are terms that people use to describe the market. So we would expect, if we're selling, we'd expect the euro to be weaker than the dollar, so price would go down. We're making sense? We good so far?
Mhm.
Okay, perfect. I'm gonna wait till.
So am I actually buying currency?
So you're not actually. So you're not necessarily actually buying it and holding it. What you're with the platforms, what it allows you to do is it allows you to invest in it. So it's a broker that allows you to invest in it. So when you click buy and sell, you're not actually keeping it. You're more so saying, okay, I'm expecting this to go up. So I'm buying it and holding it, assuming or pretty much predicting that, hey, if I'm buying, it's going to go up. So when it gets to this specific price, I'm going to sell it. And that
Right.
way, when you sell it, boom, you liquidate your position, and then the money that you made is in the account. Or if I'm gonna sell, if I say, hey, I think price is gonna go down, I would click sell. And what it would do is as long as it's going down, I would make money. And then once you close your position, the same thing would happen. Your money would be in your account. So you're not actually physically holding it. What you're doing is investing in it and saying, hey, I think this is gonna go up or it's gonna go down.
Which is
And
totally different than like a 401k that we have because we're holding those stocks.
yes,
Okay.
yes. So
Say that
yeah, it's
again,
different.
Miss. It's it's
Oh,
like
oh,
what?
yeah.
Now 401ks, you
Yeah.
know how we have our positions there in equities.
Right.
Okay. So we're holding on to those.
Oh yeah. Yeah, yeah,
Yeah.
yeah, yeah.
And these here, it's just a quick trade.
Yeah.
Got
So it
you.
can be, so there is different types of trading. So there's swing trading and there's
Oh,
scalping and there's intraday. So swing trading is long term. So that's the type that like to have the position. They like to trade on bigger time frames. So such as the daily and the weekly or 4 hour. So I'll say those again. So swing traders trade on the 4 hour. So you can put 4H and then parenthesis hour. That's what the H stands for. Or the daily. And these are all just different time frames. And when we go to the chart, you're going to see exactly what I mean. Those people like to hold positions for weeks, sometimes months at a time. That's it. Those are or every quarter. They hold positions for a while. Or you have people who trade intraday, so which is throughout the day. So basically kind of like what we're doing. So how we're looking at the market at the New York session, so 10 o'clock, if the trade is going in our direction, we can continue to hold it throughout the day. Because if it's continuing to make us money, why should we cut that short? When we're right, we want to be right big. When we're wrong, we want to be wrong small. So there's different types of traders that there is. And as we go through, you're going to see if you're the, oh, I like to hold things longer or I like to be in and out. And that's just kind of when you start to see how you are and you see with the market, you're going to see kind of how you are. And then it's going to kind of tailor. You'll be able to tell what kind of trader you are.
Okay.
So,
All
basic
right.
terms. A pip is the smallest price movement in a currency pair. So this
Okay.
is how.
Hold on one second. My computer is getting ready to go out, and I'm trying to figure out. I'm sorry.
Oh, you're good. You are A-okay.
Your grandfather and tie-in.
All right, perfect. So we're back. So yes. So now basic terms. These are very important because this is one, how you calculate pretty much how you're able to see what it is, like how price moves. Two, you're going to be able to see how much you're entering the market with. And three, this is basically how you're able to grow your money and allow you to multiply it. So we got PIP. This is the measurement of the market. This is how you're able to determine how much, what your goal is. If I want to make X amount, this is how many pips I need because this is the measurement of price. So here, think of pips as steps. If I want to go up, if I say, hey, the market is going to go up 10 pips, think, oh, the market is going to go up 10 steps. With the pretty much, or I'm going to wait till you write that, and then I'm going to add in the lot and show you how the pip in the lot size, how it brings it together. So now we have lot sizes, which basically is saying this is how much we're entering the market with. So I'm gonna have you write down, so you can write like a little dash because this is going with the lot size. And then once you have these three written down, it's gonna be even easier. So a 0.01 is equal to 10 cents. I'm gonna just to make sure, a 0.01 is equal to 10 cents.
Okay.
A 0.1, you can put a 0.10. Yeah, put a 0.10 is equal to $1.
So a 0.01 is
Mm-hmm.
1 cent.
10 cents.
A
It's 10 cents.
zero
If I, yes, 10
cent,
cents. It's
10
equal
cent,
to
and
10
then a
cents.
0.1 equals $1.
Yes.
Okay.
And a 1.0 is equal to $10. You got it?
And this is the standard unit of trading that you
Yes.
just covered. Okay, I'm good. So it's
Boom.
this is the pip.
Yes. So, well, this is the lot sizes.
No, this
I'm
is
gonna
the
go over the pip again. We went over the pip. I explained the lot sizes because I'm gonna now bring the pip and the lot size together so you see how they go together.
okay.
So
Okay, okay.
now,
Mm-hmm.
so now how I was saying you want to think of pips as steps. So lot size is what we enter the market with, is what tells us how much our pip is worth. So we want the price to go up 10 pips. And so think of it as 10 steps. If we enter the market with a mini, or my bad, it's a micro. A micro is a 0.01. But you don't have in the easy thing is you don't need to remember mini, micro, standard. You don't have to. A 0.01 is equal to 10 cents. So let's say, oh, we're going to say the market is going to go up 10 steps, and we're going to enter with the 0.01. Every time, every step it goes up, every pip that it goes up, it adds 10 cents to our profit. So if the market goes up 10 steps, how much did we make off a 0.01?
$1.
Exactly. So we made $1 because the market went up 10 steps, it went up 10 pips, and we put on a 0.01. Each step is equal to 10 cents.
I
So
don't
now,
understand the profit piece though. How is that profit? If
because
you're
oh, Keep going.
Okay, if I gave up $1 out of my
You didn't
account,
give anything. You didn't give anything. So remember, you didn't give anything. It's not like, oh, I'm giving the money. When the money is in the account, it doesn't go anywhere. So when you place a trade, it's equity. So your balance is not moved at all. Your equity is moving though. So as it goes up, let's say when it goes up that 10 points, let's say you had $10 in the account and it goes up 10 points or 10 pips, I should say, 10 pips, and you close out, that means now you have $11. It's not like at a casino where, oh, I bet $1 to make $1. I'm not losing anything until I close if I'm losing, if it goes the opposite way, then obviously, and I close that position, I have lost.
got
But
you.
Oh,
yeah, so
oh,
when I close the position, but wait, let's say, so I'll get to that part in a second. But first, we got to understand if we're buying and we say, hey, it's going to go up 10 points, 10 pips, and it does go up 10 pips, now we made $1. Do we get that so far? Okay. Now, let's say the contrary. Let's say we thought it was going to go up, we bought it, and it went the opposite way, 10 pips. And we put a 10 cents, a 0.01. Then that means we've lost $1.
If we said it was going to go up and it goes down.
Yeah, and we were wrong. So that means we've lost $1. So that's when you've actually lost. Like it's more of so a realized loss. So once it's closed and it says, all right, if it goes down 10, we're gonna close, and it goes down 10, and we're like, dang, well, we lost this one, we've lost $1. So now we understand that, okay, as it goes. Now how this is where it gets interesting. We can do the same trade, the same move, but put different amounts on the trade and make different amounts of money. So let's say I put a 0.01 on that trade and I did 10 cents per step. Let's say Nana Glover, you put 1 point or 0.10. So a 0.10, which is just a 0.10, just like how you have it written down. Boom, that's $1 per pip. Say Auntie Marsha, you put 1.0. Now I made $1 on my trade. Nana Glover, you made $10 on your trade. And Auntie Marsha, you made $100 because a 1.0 is worth
is
$10 a pip.
$10. And it went how many? I guess 10 steps.
10 steps. So that's why when you understand the scale, if you can do it with a 0.01, you're able to make money with a 0.01. Once you start to get to bigger numbers, the strategy is the same. Everything is the same. The only thing that changes is the lot size. That's what makes the difference that's the difference between millionaire traders and traders who don't have that much yet. Is just simply the lot size. They're just using bigger lot sizes than you. That's it. So that's how pips and lot sizes work together. We manage our risk because we calculate how many pips we're willing to risk and how many pips we want to win. Does that make sense?
It does. I'm sure I'm gonna have to hear that one more time, but it does.
Oh,
Yes.
okay. So, yeah, I got you. And then when we go to a chart, it's all of this stuff is going to start to merge together and it's going to make sense.
So a pip is just a measurement.
Yes.
Lot is a unit of trading.
Yes.
And leverage is
That's what allows you to basically allow you to multiply your money. So for instance, let's say we have a $10 account. That
okay.
means depending on the leverage. So there's different brokers that have different amounts of leverage, though typically they're 1 to 100. Does that really matter to you? Not much. In a simple terms. What it allows you to do is allows you to grow your money. So the amount you're able to put on a trade. So that basically it stops you from basically putting all of your money on a trade at once. That's essentially what that does. So essentially what it does is it protects you. It allows you to multiply, but you can't put all of your money on it. Like how, you go to a casino or a stock or whatever, you can throw all of your money into it and you can lose it all at once. In this, depending on the leverage, that's what causes they will close your trade out for you if you're using too much of your leverage. Say
Is
you have
that
10,
like margin accounts?
yes. So in those cases, how people get margin calls in foreign exchange, you're not necessarily going to get a margin call to close your position. It's just going to close it automatically. But with risk management, that's how you understand. Once we get to that point, you're going to understand how to not have that happen.
A margin call. Okay, she introduced a new concept. Is that like a handicap? Shoot.
So easiest way to explain it is so essentially like in stock exchange and companies, when let's say
Hmm.
they place a huge position on a stock because they think it's going to buy
Yep.
and it starts to drop, what would happen is the brokers would call them and say, hey, you're running out of money, you need to close your position, basically realize your losses, like you're losing, you have lost, like it's going down. And what they would have to do is close their positions. And if they didn't, then there would be penalties and things that would happen. But in this case, you'll see it on your screen. Your screen will have, it either won't let you enter the trade or it will close your position automatically.
Oh, okay.
Yeah.
Okay.
And that's called over leveraging, which we're not doing. We're not here to, this is not we're gonna, no, that's not even gonna be a thing. So if you see your screen turn red just because it's your leverage is in the negatives, that means you're doing way too much and you shouldn't be doing it in the first place. So
Oh, okay.
yeah.
Is that
So
like,
we're
or is
mhm.
that because of the platform that you're on? Is it different for different platforms? Is-
It yes and no. It depends on the broker per se. And
Oh,
it
okay.
depends on it depends on the broker. And the brokers,
Okay.
they state it so when you're like when you make an account, you're able to what you're doing. You know what the leverage is, not necessarily saying that it matters. Oh, what is this? No, it's just those are problems when you over leverage and you're using too much of your account. That
Mm,
means, and that's not the goal. We're not here to flip account. Well, obviously we want to grow it and multiply it and whatever, but we're not here to just turn an account over in one trade. That's what happens is when you try to flip accounts in one trade and you put way too much and the trade starts to maybe go in the opposite way a little bit, that's when you start getting scared and oh, it might close out. But when you have proper risk management, you're not even worried about that because I have this much to risk, it's this percentage of my account, and so on and so forth like that.
okay.
All right.
Okie dokie.
Okay, now this example that you give us,
Mm-hmm.
I didn't hear you talk about 0.0001.
Okay. So I was
Yeah.
gonna actually go over it on the chart because
Okay,
it'll
good,
be
good,
yeah, it'll
good.
be a little
To keep
easier.
it
A
moving. Yeah.
micro lot.
Yes. So then pretty much now risk of foreign exchange, it's volatile. So when we're seeing price move, it is moving. It's gonna move. That's the easiest way to put it. We're gonna see action. It's not like it's gonna take months for it to do something. No, we're gonna see it do something every single day. Leverage can either grow. So the higher the leverage, the basically is the more risk. That's the more it can add to your gains, but it can add to your losses. So that's why when you have to understand that leverage can help you and it can hurt you. Though managing risk is the middle ground, which is what takes that part away, which makes sure that your losses and your gains are controlled and you know what you're doing. Example, just like how I was saying, currency pair goes the opposite way, you can lose money. You can lose money. Simple as that. That's what the risks are. Though we manage our risk, we understand. So now what you want to write is write the letters TP, and you can write like a semicolon or a dash, whatever. That means take profit.
TP.
Yes, that means take profit or target profit, whichever
Oh,
one you feel like will work better for you.
take profit.
Yes.
Okay.
And then under that, you want to write SL, which means stop loss.
What was that?
Stop loss.
Stop loss. Okay, got you.
Yes. So what your take profit does is when price, so let's go back to the steps in the pips. Let's say we're at zero, we're in the middle. We expect price, okay, we want to make $10. But we only want to lose, let's say we want to make $10, and let's say we're going to put our stop loss $5 below, 5 pips below, because we're going to say, hey, if price goes the opposite way, 5 pips, we're going to close our position and we're only going to lose $5. That's what we're willing to risk. And we don't want to risk any more of our account. We only want to risk $5. So
Uh,
we'll set our stop loss 5 pips below our entry. And like how I said, for our what we want to make $10. So our take profit would be 10 pips above our entry, which is what we're going to go through how to do that. So don't worry. But so let's say we enter the trade, we preset, everything is set before we plan our trades. We're not just getting in and then, whoa, no, everything is planned. Let's say we get in, we have our stop loss set, $5, TP set, which is our target profit. Price, let's say it shoots up and it continues to go, it goes up 10 pips. It taps our take profit. Soon as it taps it, it closes our trade. We have secured our $10 and we're done. We're out.
so we made our TP kind of thing.
Yes. Yes,
Okay.
we hit our target profit. We hit our take profit. When the market hits your take profit, it will take you out of the trade automatically once it hits that price. You can be asleep, doing whatever, partying, whatever. You can be watching it. Once price hits it, it will take the boom, take you out of the trade, close it, and your money will be in your account. And it won't go anywhere unless you trade again. On the
Oh, so
contrary,
you actually set that in the program when
yes,
you enter.
yes,
When you enter some units, you set the TP and the SL.
yes. So essentially, that's another word is parameters. So you can write another word will be like, what are your parameters? What did you do?
Got you.
What is your SL? What is your TP? And that way you're able to see, okay, well, I want to make $10 and I only want to risk $5. That's how you're able to win. That's called a 1-to-2 risk to reward. So for every dollar I risk, I want to make 2 to that. So I'm a risk $5, but I want to make 10. So if I have 2 trades, I can lose one and win one and still be in profit because I lost 5 and I won 10. So that's how you manage your risk, is a stop loss and a take profit. Those are the main things. When we enter a trade, we always have a place where we'll exit if we lose, and we'll always have a place where we'll exit when we win. We got that.
Interesting. Yes.
All right, perfect. Now let's go for tips. How I was saying last week is how we were going to start is demo accounts. We're going to begin with demo accounts and understand how the market works, how the lot sizes work, how do things work. Would you rather get thrown in an NBA game, or would you rather practice with the NBA team and understand how they work? What are their metrics? What do they do? How do they respond in situations? First, that practice scenario, or would you rather just go all in and just be, all right, that's what it is?
Is that a question?
It most definitely is, because some people say, I want to go all in first. So I got to know.
No, I want a demo.
Oh no, I'm a start small, learn first, stay updated, blah blah blah. I'm liking that.
Okay, perfect. So yes, we're going to start with the demo account, understand what we're doing, make those rookie mistakes, and it's okay, they're going to happen. So don't ever think I don't make mistakes. I still do. But you'd rather make them on small accounts, demo accounts, rather than when it's your actual money. Then learn. Take that time to educate yourself. So when we go over trainings and we do stuff, the homework is not for me. It is meant for you to understand and to see What do you see? How do you see the market? How do I see the market? And things like that. So it's all about the skill. Just like how I was saying, we can be in the same trade, but we all make different amounts of money just because of the amount that we put on the trade. And another thing, stay updated, just like how y'all watch the news, which is perfect because the news is very important because that's what moves the market. I'm going to show you a website that'll show you the economic calendar. And that way you'll be able to see when news events come out, what's important, what news events are important, what isn't, and certain things like that. And then also practice trading virtual money before real money. That's
So
when the
we
demo
can go
counts.
in anytime and practice?
Yes. Yes, you can.
Oh,
So there's gonna be times when we go get to the strategy part. I'm gonna show you the times we look at, the times, the specific time frames, and what you can do is every day, if you want to see it happen live, you can go on a demo account and trade it live, or trade was a demo, but trade it as it happens. So you get the reps in. So that way, the only difference between a demo and a live account is the money. Nothing really. That's it. Like if you can do it on a demo, you can do it on a live. But a live account is just obviously it's real money, so you're gonna have different emotions and attachments to it and things like that. But the main thing is you understanding how to do it before, so you're not getting too lost in the sauce. Now, kind of to go over what we went over, just to summarize the whole thing. We went over understanding currency pairs, the hours of the market, trading mechanisms. So basically as essentially like pips, lot sizes, margin, or not margin, but leverage, trading platforms, certain things like that. Remember the term pips. If you want to, so pips, it means points in percentage. You don't necessarily, you can write it down if you want to. It means point in percentage. That's what it means. Doesn't necessarily matter in trading. Do you need to know the exact term? You don't. That's the thing about trading is you don't, that it doesn't, the name, the term doesn't matter. It doesn't relate. All where it relates, but you need to know what a pip is. Then start slow. Let's do it. Let's do this with caution. Let's understand this is not a get rich quick. We're here to learn, understand the skill, because once you understand the skill, then the money will flow. And then last, what questions do y'all have so far? We're gonna go to an actual chart. So this was the hard part. This was what we went over. That was the main thing. We're gonna go to a chart and I'm gonna show you what it actually looks like. So do you have any questions of what we went over so far?
nope, nope.
All right, perfect. So I'm
I
going
think
to
the
go
only
to,
thing is I understand pit lot leverage is kind of fuzzy to me, but if we keep going, I'll catch up.
got you. Okay. So I'm gonna share my screen again.
Oh, I think I watched I think one of your free videos
Mm-hmm.
went into how you were trading. I'm
Oh,
sitting,
okay.
oh, that's interesting.
Okay. Oh, I'm clicking the wrong thing. Okay. Okay. See how I was talking about the website, or I was saying there's a website where you can see the economic news calendars.
Mm-hmm.
The website you want to type in is forexfactory.com. And this is what it'll look like. So
Oh, this is the one that we used to look at, right?
exactly. So yes,
So it's
Forex
just
Factory.
forex.com,
Forex Factory.
factory.
Yes. Forexfactory.com. And this is very important. You need to check this. You got to put an exclamation marker. Please remember, because when you trade, if you do not remember that there is news, your whole analysis can go to the trash can instantly when news comes out. Yes, ma'am.
How often do you look at this?
Pretty much once a day. So before I'm gonna trade,
Okay,
uh,
so before you trade. Okay.
yes, because for instance, let's say I'm gonna trade if I'm trading London session, that means I'm up at 2 a.m. I'm up that late. sometimes I might be in a position earlier than that. And if I don't check the news and know that news is coming, I can be up in the position. But when news comes out, it's a lot of times there's a very sporadic movement where, and you don't know which way is going to go simply because you never know. That's the wild thing, is we don't necessarily trade news specifically like, oh, I think it's going to do this, because I'm going to show you in the market what it looks like and why you don't necessarily really want to touch that, or you want to be careful around it or know that it's coming. But when you watch the news, oh yes.
Okay, so let's say you're in a position
Mm-hmm.
and you look at the news and you see some not good news. Once you're in the trade, you're in the trade, right? You can't get out of the trade.
So you can't, yeah, you can, or you can, for instance, you can get out of the trade, but there's things that you do. So you wouldn't, once the news happens, by the time it's too late. Easiest way to
Right.
put it is once you see it says 2 o'clock and you see it's getting closer and closer, once 2 o'clock hits, or either right before it, you're gonna see sporadic movement. But there's things you can do to alter, to minimize your risk when you see that
Okay. All right. And
yeah,
you don't
that is
have to
coming.
go through that right now, but because
Okay.
that's probably more advanced. Um,
Yes. So when we get to a
okay.
chart, yeah, when we get to charts, simple is there's ways in which you can do to basically minimize your risk if you see that news is coming and things like that. But this is the
Okay.
website that you'll look at. Red folders and orange folders are the ones that have more impact. The yellow folders don't necessarily do too much. They're considered low impact. So they're not expected to move the market like that as much as the red folders, as you can see. The red and orange folders are the ones that you mainly want to pay attention to. There's even a filter to your right that you can change, that you can only see if you want to. You can get rid of all the other two, which are the yellow folders. They're just they're still new. They're just not as impactful. Got that so far?
Is this like real time
Yes. So I'm gonna show you.
information? Okay.
Yes, this is real. This is legit. So like when Powell or when the chair speaks, when Trump used to speak, every time he used to speak or tweet, the market would go crazy. Like it would just do whatever. So this is real time. This is telling you. So, and there's a timer. Oh, yes.
The time, is that our time or
At
overseas?
Eastern is
11
our time.
20.
Okay, so it is Eastern. Okay, gotcha.
Yeah, so it is our time.
Okay.
So we're gonna go to this, and I'm gonna type in, I'm gonna just go through it again. Tradingview.com.
Trade view.
Tradingview.com is free. This is we spoke about this last week. This allows you to look at the charts for free. This is a
What's it
way you
called?
can tradingview.com.
Okay.
So I can most definitely, I can send that also to you. Let's say if you forget it or whatever, I can make sure that you have it. Um, but what it does is it allows you to see the charts for free. And I'm going to show you where we go when we're typing in the currency pairs to look at them for you to see, oh, okay, well, this is what it looks like. So right now, it's pretty much loading up. But yeah, Forex Factory is very important. So here, I would suggest you make an account. So, and there's a free account. So like how I was saying before, I don't necessarily suggest you get a paid account yet, because there's a lot of different features on it and that can add to it, which are really good, but you don't necessarily need them right now because you wouldn't use them. So I don't want you to pay for something you're not going to use. So you can just make a free account. Simple as that. You'll be able to look at the charts and be able to do whatever, everything that I'm doing, you'll be able to do just as that. Okay.
Okay.
Mm-hmm.
So what is the paid account going to do for us?
So all the paid account, or the paid account, it allows you to have indicators. So there's different tiers of it, but essentially you can have indicators, which back then when we traded the faster time frame on IM, that was how all those different colors and different things, the lines that they had, indicators. we're not using those. So that isn't really worth it for you. You're able to split it into multiple charts. So at this time, I don't suggest you do that because I think you should just look at one chart, one chart at a time. But as time goes, you'll be able to see, okay, having multiple charts, how this could either be a benefit to you or is it pretty much not necessarily better for you?
Okay, but once we trade for real with real
Mm-hmm.
money, is that a paid account or?
Say that one more time. You kind of broke up a little bit.
Okay, so we're gonna trade with money.
Yes.
Okay, so if we start trading with real money, do you have to pay for an account or is that still
No,
free?
still
No, what?
free.
It's still for free.
Yeah.
Okay, gotcha.
Yes. Yeah, still for free. Let's see. Computer is moving so slow. So I'm gonna pause the recording real quick. Zoom. So this is where you would go. So search, pretty much when you make your account, it'll allow you to search up anything. So this you can look at stocks, um, whatever you want. So of course you can look at all of those different things, the Dow, all of that. But we're gonna look at Euro USD. So EUR USD. So for those that you might hear someone say EU or something along those lines, that means EUR USD. So
Is that on here?
not yet. I don't know why
Not yet. Okay.
yeah, it's like everything we look for, and we're gonna type it out because we don't want to go to the wrong thing. So right here, you'll type in EUR. Once it loads.
Okay, so then we're looking at currency
Yes.
trades.
Yes. So we're
What we
gonna
just spent the hour talking about. Gotcha.
yeah. So this is now what we spoke about. This is what it looks like. So when you're typing it in, we're looking at Euro USD, the euro versus the dollar, or USD
Oh,
JPY. This is where you type it in.
okay.
All right. Is it gonna load? That's the real question. All right.
Mhm.
One thing I will say is my patience has gotten better. All right.
You're reminding
E.
yourself?
Does it
Yes, I have to.
usually act this slow?
No, this is my computer. This is the Wi-Fi, the internet. Because usually it's not the website. Usually I'm able to get on. But my computer is acting slow, probably because we're on Zoom. So
Oh,
now we're able to, yeah. So EUR and then the USD. So you type in Euro USD, you're going to see a lot of different versions of it. All
Mhm.
these are just different brokers. So different brokers have different prices, but it's still the same chart. So if Euro USD goes up 10 points, it went up 10 points. On another thing, is going to look like it just has a different price, but brokers have different prices. So they're never all going to be exactly the same, though the broker that you're trading on is going to be the one that's going to tell you the exact price. So we look at this for analysis. This is able to give us the big picture. We're able to say, okay, so you can literally just click the first one. And that way, when you click on it, it'll load, the chart is going to load, and it'll be a fresh chart, and you'll just see something called candlesticks. And while this loads, I'm actually going to share my screen, and we're going to go over what a candlestick is. So that way, you're able to know what we're looking at on the chart. And I promise we're almost done. We're almost done.
Oh,
Yeah, I promise we're almost done. We're about to reach our hour. Okay. Can you guys see my screen?
yep.
mhm.
Okay. So to the left, I would say draw this out too, because this is what a chart is made of. This is called a candlestick. So a buy candlestick will typically be green. When you understand kind of the anatomy of it, The color, some people have different colors for it, but more times than likely, it'll be either be green or blue. And that means price is going up. So as we see on the left, the arrow is going up. That means it is increasing in value. We have the open, which is right here where it says open. This is the body of the candle. So I'll slow down a little bit. So, we have, this is the body of the candle. This is where the green is. This is how we're able to see what is price doing. What did it do? This is how we're able to tell the history of price. Honestly, this is what we're looking at. We see the open is at the bottom, which is right here, at the bottom of the body, because price went up. So the open of a buy candle will always be at the bottom because price had to go up. And we see the close is at the top because that means, let's say this was 1 and this was 10. Price started at 1. It went up 2, 3, 4, 5, 6, 7, 8, 9, and it closed at 10 right here. Does that make sense?
Mm-hmm.
Now we have these things right here at the below the body and above. These are called wicks. So the easiest way to remember what a wick is where price tried to go. Price attempted to go there, but it didn't want to stay. And that's what wicks are. It's where price attempted to go, but did not want to stay. So we see how right here, price was at 1. Or actually, we'll make this 0 to make it simple. 0. We see price came down and it created a low. That's what this is called. The bottom of the wick is the low. So it went 0 to negative. Let's say it went down in the negatives. Boom, -6. And then it didn't want to stay there. So price came back up. So at first, this candle was red because it was selling. It was going down. Then it went up. Then it turned green. So if it's above the open, it will be green. If it's below the open, it'll be red. And as we see, price went above and it came to a high. We can say this is 15, but it didn't want to stay there. So price started to come down. So by the time price closed, what do we see? It closed right here. It created a wick on the bottom half and it created a wick on the top half. And that way, that's what makes a candle. We have a body. We know the open is at the bottom and we see that the close is at the top. And then we have 2 wicks, which basically is saying where price wanted to go, but it did not go. Or it didn't want to stay, I should say. Do we understand that part for a buy candle? All right. So now we have the sell candle, which is the opposite of the buy candle. We see that price opens at the top of the body right here because what did price do? It decreased in value. So it went down. 9 times out of 10, we're going to see red is equated to sell. So when you see red, 9 times out of 10, you want to think down. Value is being decreased. We see price came down all the way to the low, but it came down here and it didn't want to stay. So price came up and it closed right here, which is what made us see red because price, it opened here and decreased in value and closed right here. That's why this body is red. And then as we see, boom, when price opened, it came up here to a high, but it didn't want to stay. So it came back down all the way to the low, didn't want to stay, but it wanted to come here. So that's where price was closed. Do we understand that part? Okay, so Nana Glover, explain to me the anatomy of a buy candle.
Okay.
The
You
anatomy of a what?
A buy candle. So Nana Glover, tell me about a buy candle. Just explain it to me. It's the easiest. Just explain it to me.
Sure. Okay. So it's usually green, a buy candle. You're going to have uh, 2 components. You're going to have the body. You're going to have the wicks. Okay. The opening is at the bottom of the body.
Yes.
Okay, the close is at the top of the body. And then
Mm-hmm.
you'll have your high wick that's above, and your wick that's your low end is going to be at the bottom of the body where
Yes.
it opened. If I said all that right, I felt like it
Yeah,
was
you
one
did.
jumbo. Okay.
Oh no, no, you got it. Auntie
Okay.
Marcia, talk to me. Tell me about a cell candle.
So what, the other candlestick?
Yes, ma'am, on the right.
Okay. So apparently you opened at a certain point and the price started going down
Mm-hmm.
and it went to a point where it was below, it can go down as low as your low. And at some point, you're going to close, you're going to know that you're losing money. And so you want to close that trade.
So not necessarily, it's not the trade. The candlestick is
Well,
just the history of the market. It's just telling us
okay,
what, yeah, it's just telling us what the market is doing. So we're not closing a trade. This is just, we can make money whether it goes up.
got you. Okay. When do you actually see this? So is this just a representation of what it'll look like on the actual chart?
It looks like Jalen got frozen.
Know what I mean? Yeah.
Yeah, he he's frozen. But anyway, what was your question? I was so busy looking at Jalen.
So this candle is a representation of what you'll actually notice in the actual market data.
Correct. So when we're looking
Okay,
at the charts,
right.
you see a bunch of those candlesticks.
Got you. That was okay. You answered the question.
Gotcha.
Okay, hello.
Hey.
Hi.
One
She
second. Your
answered my
Wi-Fi.
question. I was asking about the
Sweet
representation
girl.
of this candlestick. Where would I actually see it? And I said it would actually be on the market chart
Mm-hmm.
that we would see these candlesticks.
Yes. So that's where
Oh,
we're about to go.
okay.
Oh, yeah, my bad. The Wi-Fi
That's
literally just
that's
went out on
okay.
me. So, okay, perfect. You explained that. Now let's go back to the chart. And then I'll be able to show you exactly what it looks like. So we're bringing everything together. Let's see, let's go here.
Got a wick going on.
Yep, now we're just bringing everything together
Okay.
and we're gonna see it. Okay. Okay. So let me know when you're able to see my screen.
Yep. I see green and I see red.
Perfect.
I see a bunch of candlesticks. Is that what I'm looking at?
Yes. So I'm gonna zoom in. We'll just zoom in
Okay.
for you.
Oh,
So now you see how candlesticks, they all look different.
yes.
Okay. So now I want you to write trends on your paper.
What?
Trends, T-R-E.
Trend.
Yes, like a trend. A trending topic is another, or you can probably hear, but trend.
Mm-hmm.
Now, there is three types of trends. There is an uptrend, downtrend, and the last one is consolidation. So I'll say it one more time just in case. We have an uptrend, a
Mm-hmm.
downtrend, and consolidation.
Mhm.
To make it simple is actually, Auntie Marcia, looking at what we can see right now from the left to the right, is the market going up or down?
It looks like it's trending up to me.
Okay, that is an uptrend. When the market is as an overall, it is moving up. We see here what uptrends consist of is when they make highs, or they, well, my bad, this is a low, a low, a high, a higher low, a higher high, a higher low, and a higher high. What a higher low is we see there's this low right here, right?
Which, oh yeah, okay. Yes.
So there's a low right here.
Mm-hmm.
And you see how the lows are continuing to get higher.
Mm-hmm.
That's how you're able to determine what an uptrend is. If you're seeing lower or lows continue to get higher, and you see that highs are continuing to get higher, that
Mm-hmm.
means we are in uptrend. Does that make sense?
So, which was the first one that you talked about a downtrend or just different kinds of uptrends? There's a
There's three,
low up. Go ahead. Mhm.
yeah, there's only three trends. So right now we're looking at an uptrend.
Okay, that's what okay,
Yeah, right
good.
now we're looking at an uptrend. And the
Up,
easiest way is that you don't want to overcomplicate it. That's what a lot of traders do is we like to overcomplicate things. If we see as an overall the market is going up, we need to think, what do we want to do in an uptrend? Do we want to buy or sell? What do y'all think?
I want to buy.
Okay.
let's see. Uptrend is when if the price is higher. So I might want to sell.
Nope. Because think about it. You want to buy
Buy?
when, yes, when
Okay.
price is going up, you want to follow the trend. You want to go, you want to be with the trend. A lot of times what
Okay.
people think is they'll say, oh, well, it's going higher. This is the roof. It's going to start selling. You never know that you can't buy low and sell high because it's all relative to where price is at right now. Years
True.
ago, Bitcoin being at $1,000 was outrageous. It's never gonna hit that. Why would Bitcoin at 1,000? It's only at $2, $3. Now we look at it today. If Bitcoin now Bitcoin is high compared to where it was before. So you
Hmm.
always want to look at where it's relative to price. So if we're looking at a trend and we're seeing that it's making highs and lows, a high, a low, a high, it's an uptrend. We want to get in with the trend. So which spot do you feel like would be the best place to buy? So this is the first one, second one, third one, fourth one, fifth one, and sixth one.
The third.
Okay, you feel like the third. Nana, what about you?
Well, it all depends what time I turn on my computer.
Okay. So which one? Let's just say you start. We looked at the computer and it was at this green. Let's say I think it's like 11 o'clock. So over here. Which one, where would you feel like is the best places to buy?
Which circle?
Yes.
Probably right after the consolidation. So I would say the third.
So right here.
Mm-hmm.
Okay.
No,
So
no, no.
y'all are, oh,
The third from the left.
right here.
Yes.
Okay. So yeah,
That's the one.
y'all are both good. These are both any area down here is a good area to buy because
Especially if you're noting the trend
yes, because we
and
want to be able to catch this. We want to catch these moves. We want to
you
catch
want to
this.
catch the wave.
Yes, we do not want to be in this part.
We do not
Right.
want to be where?
In the
I'm
fourth.
circling.
In the
Yeah, I'm
fourth
circling
one.
it out right now. I'm gonna make it red.
Okay.
We do not want to be looking
Gotcha.
to buy and the negative parts. And the reason why is because a lot of times we'll see price go up and we'll buy up here at this green one. It sounds illogical and you'd be like, why do people do that? But when you're looking at the chart and you see all this and you think you missed it, we'll buy up here and then wonder why we're losing here. Because the market has to make a move. There is an impulse. So you might want to write number one is an impulse. IMPULSE, an impulse. Two, a correction.
Mm-hmm.
And the third one is a continuation.
And what are these moves called?
This is how the market moves. So this is the movement of the market. Either price will always be at one of them. So here we see price made its move up, and then we have the red, which is the correction or retracement, which means price is taking a break. Easiest way to put it is going the opposite direction of the trend. And how I was saying, price always has to be balanced. For every buyer, there has to be a seller. That's what retracements do, is it balances out price to allow price to move to another intended area. So that's what this area is for, where it goes down. Then once price feels like once it retraces enough, it goes to the point that we're expecting. It makes a continuation, the big move.
Gotcha.
And then once it makes a move, it will continue to retrace. And then it will make another move. So all price is doing is impulse, is making an impulse, is correcting, or correction, retracement, it's retracing, or it's making a continuation. So that is what's up?
Go ahead. Yeah. So let's say you said consolidation. Where did you see that? How did you see that? When
It's
we were talking about the three circles, you said at the consolidation. You see
yeah,
consolidation somewhere?
I see two big consolidations, and that's between the first and the second bubble here, where the candlesticks are kind of tight together. To me, that
Uh-huh.
looks like a consolidation.
So perfect. So thank you, Nana, for explaining it beautifully.
Mhm.
Consolidation is when the market is moving sideways. So there is no clear direction in the market. So I'm going to just zoom in on this area and I'll show you. So right here, there is wrong button. There is no clear direction of what price is doing.
Got you. Okay.
Obviously, we see it is moving up and down a little bit, but literally, if you can put it all in a box, just like that. Price is
Okay.
moving sideways. We're not trading that. What we're doing is we're going to look at that and see, okay, that means price is about to make a big move next. So we're going to keep that on our radar so we know, hey, all right, this is coming and this is what's about to happen, but we're not going to trade it. We don't want these little moves.
Little movements.
Yeah, we want the big dogs. We here for the big money. If we're gonna get into a trade, we're gonna try to. We want to be in at the best point. It's like the wave. You want to ride the wave that's gonna bring you the furthest, not the wave that's gonna the little one. You want to ride the wave that's gonna bring you the most adrenaline. Not necessarily. I'm saying adrenaline as if we're surfers. So not necessarily in that, the case of no. We want to be in the biggest move because if I can be in a move for 10 minutes and be done, I'd rather be in for 10 minutes and be done rather than wait a whole 30 minutes and then make the move happen and then I'm out in 40 if I can just wait and be patient.
Okay, so what made you get in on that bubble right there? Is it the wick that drove you?
No, so when we get
The
into the
trend
strategy,
that we saw.
yeah, so as an overall, it's the trend. So when we get into the strategy, That's what's going to explain why
Okay.
we're
Okay. Yeah. I don't want to jump ahead. I mean, how
No,
did,
yeah.
yeah. So right now, we're just going, now I'm just showing you the trends. So do we understand like an uptrend, how to kind of see what an uptrend looks like?
yes.
Yeah.
Yes.
Okay.
I'm not going
So
to jump
now the
ahead.
downtrend is similar right here. Do this the opposite way. So let me get rid of these lines.
That was definitely a downtrend.
Exactly. And if
Okay.
you're not sure, all you have to do is look from left to right and ask yourself, where is price? What is going on? And just like here, we see we can draw a line. We have a low,
Mm-hmm.
another one. We have a high. Again, we have a low. And this is a strong downtrend. So it's not giving much retracement. It's moving down. And that sometimes it'll happen. Price will not be perfect. So it's never going to be exactly how you want it most of the time. So like something like this, we see that it's a downtrend and we see that it's very strong. Why? Because there is a low here and there's a high here. There's a lower low here and there's a lower high here. You see how the highs continue to get lower and you
Mm-hmm.
see how the lows continue to get lower.
Mm-hmm.
That's what a downtrend is. So
Okay.
do we understand what an uptrend is and a downtrend?
Okay. So you're saying you're looking at the green, and
So
the
kind
green,
yes and no. Yes. Okay, yes.
because
So
you're saying that the green are going lower and lower and the reds are following it,
yes.
I
So in a
guess.
downtrend, there's a lot bigger red candles than there is green. So you see how we're seeing bigger red candles rather than the
Mm-hmm.
green.
Right. Right.
And then
Right.
we go to an uptrend, you see how it changes. So now we're seeing a lot bigger green candles than red,
Okay.
just like that. So that's how you're able to tell the difference. You look at a chart and you see, do I see more green or do I see more red?
Mm-hmm.
And that's what's able to tell you which way is going. We see this one is an uptrend, and we see, or well, uptrend, and then we see right here in this section, it was consolidation. It was just moving sideways. Then here we see the downtrend because we see price. We're seeing a lot bigger red than we are green.
Mm-hmm.
Mm-hmm.
So we get that? We good so far?
We're good.
Yep.
All right. So now the homework for y'all.
Well, I have one question
What's up?
about the red and the green.
Mm-hmm.
Um, is that is €1 and €1? Is this what I'm looking at?
So this is the chart for the euro versus the US dollar. So,
Okay.
so in this instance, the euro is weaker than the US dollar. So the dollar is stronger than the euro. The second pair is stronger than the first. So right now, we're seeing price go down. So as the euro gets weaker and the dollar gets stronger, we're just going to continue to see price go down.
So that's the euro going down.
Yes.
Right. So
See,
that was my question. Like I'm trying to define what the
No,
yes.
red is versus the green. So
okay,
when I'm
yes.
looking at a pair, I'm actually looking at euro versus US.
Yes. So you're looking at the euro. Yes. So essentially, yeah, essentially you're looking at the euro, but it's being compared to the dollar.
Got you. So
So yeah.
there's a comparison going on as I'm looking at these candles.
Yes. So the green candles is showing, oh, this is okay. Now the US dollar, not necessarily saying it's stronger because you look at the overall trend. So we're looking at the overall trend. We're saying overall the euro is weaker than the dollar.
Right.
And then as time goes, it changes, it flips. So then as time goes, we're seeing, oh,
The euro is
now the dollar is stronger than the euro. Oh, wait a minute. Yeah.
no,
No. The dollar is weaker
the,
than the euro. My bad. My bad.
Right.
Okay,
Okay.
the dollar is weaker because the green candle is getting larger there. Is that what you're
Exactly.
telling me?
Yes.
Let
Yes.
me
That's exactly what it is.
let me
Now
get
the euro has gained power again, and now it's starting to go back up, which is why we see a lot more green candles.
Okay, so euro's going up. Okay,
Yes.
gotcha.
So
let me
that's
make
how when
sure
you're
I understood the euro, which okay, hold on. Okay. All right, I'm good.
all right. So now pretty much for the homework, what I want you to do is I want you to go to a chart. So like how we logged on here. So when you before I say you do the before you do the homework, I would suggest to go back and watch this video again, just so you'll be able to, you don't have to watch the whole video because find time, take piece by piece. That way you'll be able to actually I can yeah, that way you'll be able to go through and remember and see what we did and see how it was done. But I want you to go on a chart and I want you could either take a picture with your phone. Yeah, actually take a picture with your phone and I want you to text me whether it's an uptrend or a downtrend.
So
Now,
I'm
did you?
going
Oh, okay, go
to
ahead.
what chart am I going to?
So you're going to go to EUR USD. So I'm gonna go through it right now. So the ending part. So let's say you type in tradingview.com.
Yes,
You do that part. And when it brings you to the home page, or once it loads, where we'll go through it. So brings you to the home page and it's going to show that search section.
yes.
So we're here.
Okay.
Yeah, it's going to come here.
Tradingview.com.
Yes. Mm-hmm. And then you'll see search section, of course. If you need help, just shoot me a text, give me a call, and I can talk you through it. Just in case. FaceTime me and we can make sure just in case.
All
Okay.
right, and we're gonna pull up the euro versus
Let's see.
US,
Then
and you want to know the trends, but I don't know how to do the lines. I never figured out how to do the lines, or you don't care about lines and circles.
yeah, I don't
Just,
care
just
about I don't personally care about it because I only did those to make it more visual for you to eat for it to be easier. All you have to do is when you go on there and you pull up a chart, you can move through the chart and you can see the trend from the left to the right. Is price going up or is it going down?
So when I'm looking at the different things that I can select here, which one is the euro versus US dollar?
So when you'll be clicking up here where it says search. It's just
Oh,
moving.
okay, got you.
Yeah,
All
yeah.
right.
It's just right now it's just moving slow because we've been on Zoom for a little minute. So
Okay.
once
So
yeah,
I do a search for that.
yeah, so it'll be a search to your top left, or it might be in the middle, and you'll just type in EUR USD.
US. Got you.
When you type that in, you're gonna see how it'll type in a lot of different ones. And I just say click the top one, the one at the top, easiest one to do. And
Okay.
then a chart will show up, and that way you'll be able to see everything that we just seen.
Okay.
Then you'll go through it. Okay, boom. So we click it. Now this is starting to show up. And we're getting there. This is the last thing though, by the way. So I'm just
Does the
showing.
chart move or is it a state? Like once I click on the euro US, is it moving or do I select a time frame?
So you can just drag it. So you can drag it. You can just drag it along.
Oh, okay.
So
Okay.
yeah, you just take your mouse and you'll just drag it and just
Okay.
you can just move it around. You'll see price will be moving, but just wherever just drag it and you'll be able to see, okay, yeah, all right, I'm looking for 3 examples of an uptrend. I'm looking for
Yes.
3 examples of a downtrend. I'm looking for 3 examples when price is consolidated, it is moving sideways.
Oh, you're looking for three examples?
Yes, 3 examples of each.
Up, down, and consolidate.
Okay, and because we don't know how to make the circles and the lines and all that sort of thing, we'll just tell you the time period, I guess.
Yes, I can show you. I can show you how to do it too. Actually, yeah, might as well. So you
Yeah,
right here,
that would be nice.
you'll see
Unless Marcia has to get off.
Oh yeah. I'm not. Yeah, I'm
Who has to
only
get off?
taking.
No,
Oh,
I
I'm
didn't know if
good.
she. Okay, okay.
Yeah, no, I'm just. We'll get this loaded. So boom, you type in Euro USD,
Okay.
and once it shows up, you'll see how it'll have a lot of different ones, and you can just click the first one.
Yeah. Okay. Oh, I noticed you typed Euro USD. Okay. You got to put the D in there.
In low D, yeah, D, yeah, it's there. Or oh, okay, I didn't type it in all caps. But hey, you typing Euro USD is going to show up. So it doesn't have to be in all caps. And you'll click launch chart. Once you click launch chart, the chart will, it'll start to load. In this way, once it loads, you'll be able to see exactly what price is doing.
Oh,
So
on the sides you have all your little squiggles
yes.
and stuff.
So this is where you'll go to actually see how to click it. Down here, there's the brush is right here. So what I
Okay,
did is I clicked on the brush and I drew a circle. Just like that.
okay,
The high, a low, and you just continue to drag the circle, and you find the highs and you find the lows just like this in a low. So in this area, this whole section, we see how it was a downtrend. Then once we go to here, we see it creates a high that is above all of the other ones. So now what I'm doing is I'm looking and I'm just seeing this is what I'm doing. But this is how price is never perfect. So now we're seeing how price in real time, how the trend is changing. So before we were in a downtrend, and now we see, okay, this might be an uptrend. We see now a high, we see a low, and now we see price, it looks like is going to make a high. But I won't even because it's happening or that's happening in real time. So we'll go with this. So this is what I would want you to do. Circle the high, circle the low, circle the higher or the lower high, circle the low, circle the high, and circle the low. That way you're able to see what is a high and what is a low. Over here for the buy, which is the opposite, we can come over here and see. For instance, this is the low. This is the high. This is the low. And let me get rid of those over here. We're looking at it on them. This was a high. This is a low. This is a high. So do we see what I'm doing? All I'm doing is I just came over to the brush over here. Brush, boom, clicked it. Once I click it, I'm able to draw on the chart.
and if
That
you want
makes
to change the color,
um yes. So for the uptrends, I want you to put it as green.
okay,
And what you do, so when you click it, anytime you click something, once you draw it, if it's not the color you want, it'll have a little drop menu right here, and you'll be able to see it right here. So
Okay.
whenever you have a buy, you want to connect it with the color of what it is. So you want to be able to see, okay, you want to see buy, you want to see green, or you want to see blue. Whichever one is better for you, go with that color. Actually, just go with green. We want to see green money. We're going to go with that. That's what we're going to see. And then for the sells, we want to see red. So we know in our mind that, hey, price is going down. We should be looking at sells. You don't want to confuse yourself. You want to make your mind rest as easy as possible, make things as simple as possible when you're trading. So the easiest way to do that is put the colors together.
Okay, but wait a minute. At 6 p.m.,
Okay.
you have green. Don't you want to make that red? Because that's a downtrend, or what do you?
Now remember, this is the trend. The trend is the overall. The trend is overall. This here, where it comes down, is just the retracement. So essentially
Oh, okay.
how
I
it,
thought you said green and red. I don't know.
yeah, no. So when you're looking at downtrends, you wanted to make it red. That way, so you know in your head, when I see downtrend, I'm thinking red, I'm thinking sell. When I'm seeing green, I'm thinking uptrend, I'm thinking buy, I want price to rise in value. That's how
Okay,
you
I
want to
Okay.
think about it.
And this is
don't
more
see any
looking at
reds.
trends.
Yes.
Okay.
Okay, so we're just looking at trends. We're not telling you buy, sell.
Yeah, no. We're not.
Okay.
Because then, yeah, as time goes, you're gonna start to see, just like how you told me, where are the best places to buy. You
Okay.
don't want to buy at a high because when price starts to go the other way, now you just bought at a very high price. You invested in something
And
at a high price. Now you're
you're
losing
gonna
money.
lose.
Yeah, now is you don't so we don't even want that. So you're gonna see, just like how you told me where were the best places to buy, you already know the best places to buy. You want to
Okay.
buy at the retracement. But this is how I want you to do it. So when you do it, take a picture and send it to me. And that way I can see when you're looking at a trend, what do you see? Do you see what I see? And then if you're not, and it's not looking the same way, or not looking how I would expect it to, we can talk about it and see what is the disconnect, find that connect, and make it make sense.
Okie dokie.
All right. Let me just ask one question. 'Cause for
What's up?
some reason I don't. So when euro dollar is strong,
Mm-hmm.
US dollar is weak, and
Yes.
vice versa.
Yes.
Okay, just making sure I have that in my little brain. Okay.
All right, Jayla. So we're gonna meet up
Well, wait a
tomorrow.
minute. Are we meeting tomorrow and this is homework for tomorrow?
Yes, ma'am.
Oh, okay.
Okay. So this is it. That is it. This is the first call. I'm going to get it uploaded soon as it uploads on Zoom. Then I'll be able to get it on there. I'm going to write out what we went over and everything like that. So you'll be able to pretty much go back and check through and see, all right, this is what we went over, all of that and so forth. Don't be afraid to ask me questions. That's all I'm going to say. Yeah, please don't be afraid to ask me questions. And yeah, everything will be uploaded soon. I'd say latest tomorrow, but as soon as it uploads, then I can just get it uploaded on there.
Now, how do we get this recording?
So you're going to go on Patreon. So you're going to go on the website, and now everything that was locked before, it'll be unlocked. So then you're going to be able to see everything that I've posted. And it's going to be the most recent video that will be on there. So when you log on again, once it's uploaded, you'll get a notification that I uploaded a video, that I published it. And that way you'll see exactly, because I'm going to title it in the description. I'm going to write out everything that we went over also.
Okay, so we're expecting a lot from you,
Mm-hmm.
and you want us to watch this video
Okay, I think
and
I
recap, right? Okay, so that's why your input needs to be timely, right?
Yes. That's how I said, once it uploads on Zoom, then I can download it and upload up there. So it has to load to the cloud and stuff. So once that's done, then I can get it on there. Though you have your notes. So that's why I wanted you to take notes so you know everything you have to do, regardless of the video. But obviously, I want to make sure you're able to, everything's there. But you'll be able to have everything there, regardless of the video. But I'm going to upload the video as soon as I can, so it will be there anyways. And you won't have to worry about all of that. And I'm going to upload the document too, so that way you'll be able to have access to it.
Okay, and the website we go to see all this is the one that has that little certificate.
Yes, the one that I sent you in the
The
chat.
para. Okay,
Okay.
so
All
Yes.
right.
somehow I think I've already joined something.
Okay, so we'll check. Well, let me stop the recording real quick.